Welcome to the August 19th, 2019 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your weekly fast-paced tour of the global financial markets, education, entertainment, and insights that you just can't get anywhere else. So when your friends ask you about finance, just send them the link and it'll get you off the hook and they'll learn something in the process. All right, the Dow 3-year chart, this week's start. What's happened in the Dow? See this red line? We are almost exactly after this week's little rally on Friday. We're just about where we were January 18. What does that tell us? As Alex Tolene, our resident money flow expert, told us back in this correction, it is a range-bound market, and that's been true all through this time. You can see the mini panic of last year, the Dow went to 22,000, and it seems to hit a high of 27,000 before retreating. That's the trade war escalation of the headlines. We had an 800-point sell-off at the lows this week, and we rebounded to finish the week about where we started, within 1%. Is it Armageddon? It sounded like Armageddon in the financial headlines. Yield curve inversion. This dreaded condition, the world is upside down. You get less money on a long treasury than you do on a short treasury. That inversion is right here. Is it worth being scared over? The next slide will answer that. Look at this. This is the 10-year yield. That's the green. So, whoa, look at that. From last year to right now, this thing has collapsed by over half in yield to 1.5%. It used to be over 3. The 2-year yield, about 1.5. Briefly this week, you could get less for 10 than you do for 2. And of course, the 90-day T-bill up at 1.86. Why is that significant? The Fed funds target is 2 to 2.25 for overnight bank lending, but yet the T-bill is paying less, anticipating that the global bond markets somehow facilitate lower yields than what we see on these record lows. Let's see what's happening around the world. United States, you get 1.5 for loaning the government for 10 years. You get 1.5% for the 10-year note, if you will. And Brazil, 4%. That seems really low for Brazilian risk. Mexico, 3.3%. No, thank you. United Kingdom, just 0.5%. They're borrowing money at less than the U.S. France, -0.5%. You pay France money to loan them your money for 10 years. What happens if yield goes up? Duration risk. Germany, you pay them -0.7%. You pay money for supposed safety, but if the yields go up, you don't have safety. You'll lose money in the bond, and you have to sit there for the rest of the 10 years just to get back to less than where you started. I don't get it. The world's upside down. Now, Switzerland's always been negative because ne'er-do-wells hide their money there, so you have to pay them just to hold it because they won't tell anybody unless they get a subpoena. China's borrowing money at 3%. This is an incredibly low environment. Alan Greenspan said, yeah, the U.S. Treasury, those yields could go negative too. What do we do? Well, in this interest rate environment, stuff paying over 5%, like global high yield bond funds and energy infrastructure, the pipelines in the U.S. benefiting from the shale revolution, those two categories, I believe, are worth substantially more in this environment, and we get paid to wait. If I get 7% for 10 years, that's about 70%. I can tolerate the value at risk of loss in the downdrafts if I'm getting that much cash flow, and I've got nice appreciation potential from discounts. All right, let's take a look at the rest of the world. This is gold. Whoa! Hong Kong, unrest. The Chinese people like to buy gold too. You're up at 1,500 per troy ounce, over 1,500. And that spike corresponded to a lot of this talk of disruption. But also, Argentina just fell completely out of bed this week. Whoa, what's that? That's a 50% one-day decline in the Argentinian stock market. This is why we've never been big fans of emerging market equity. Better to find a good yield and loan money than to own the equity. Why would this happen? Well, the story relates back to Cristina Fernandez de Kirchner. Now, Fernandez, her sometimes husband, getting back in power, according to what we heard in this week's interview at NetWorthRadio.com with two of the world's best bond managers. Well, they have good income from oil. Argentina's defaulted more than any other country. Will they default? That's kind of a question. But the stock market loses half because Cristina Fernandez de Kirchner nationalized half of the state-owned oil company, and she simply sent an SEC form to the shareholders that said, well, hey, 51% now belongs to us and you can have the other half. Well, the stock market's anticipating a nationalization or bad policies taking the country down, and you can see YPF took it on the chin, essentially going from 20 to 10, surrounding the return of the socialists to power in Argentina. We'll keep an eye on that. Does it have much impact on the U.S.? Not yet. We'll be back next week with your fast-paced tour of the global financial markets. Be sure to go to NetWorthRadio.com for the extended discussion of the risks in long-term government securities and what might be better choices. Thank you for tuning in. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.